Hey traders, my weekend recap and video, some things I'm seeing in the markets. I had an awesome week, and considering I pretty much don't do any overnight trades, and I don't do futures, so for the most part, and I can do futures, but I just don't do them. I'm really happy with how the week turned out, considering we didn't have anybody on the trading floor. It was all automated trading. So it turned out pretty good in my opinion. So basically some things I'm seeing here. We have a little channel. See the red lines there? And we crossed below that. This is the dead cat bounce rally. And we did poke out a little bit on that. And then on a secondary tone, I put a fib fan on here and I tagged it on the bottom of this line here for the midline. And that actually lines up with that responsive sell off on that little pop there, and that is actually on the bearish side as well. So we're going into the first of the week with a bearish signal on the dead cat bounce, and we're still on the bearish side of the primary downtrend. So there's two bearish signals here setting up for the first of the week for the ES. It could of course pop and everything, but that's that's possibility. We've ran into this was February 2018's VPOC, volume point of control for February 2018, and found immediate responsive selling on the open this morning. So we found a virgin point of control, a volume point of control that acted as resistance on the way up, and it had acted as resistance way back here on two weeks ago also, and found some responsive selling at that price point. So keep that in mind. That's acting as resistance right now. That's the second time that it's acted as resistance. And then we have 2018's volume point of control that for the year, the yearly volume, the area that did absolute most business for 2018, it was way up here. So keep that in mind. Or, well, it was built out in 2017. So the value was built out in 2017, but it's 2018's value. There you go. So that's where the most volume was in 2017 hit, right at that price point. So keep that in mind going forward in your trading. Okay, on our cues going forward here. We do have a weekly, monthly point of control above us. We never even got back to that. That was from 3 weeks ago. That built out from 3 weeks ago. And then 2 weeks ago, we got this one, that built out 3 weeks ago. And then last week, this built out for us this week. Okay. So that built out 2 weeks ago. That's right. This built out last week for this area, and we played in this value for most of the week. And now we have slightly overlapping value. Even with this nice little pop, the volume profiles not putting in a breakout profile, we have overlapping value on our cues. Okay. And basically on my fib fans, we turn on the bearish side, and we're on the bearish side on the primary downtrend as well. So this still qualifies as a dead cat bounce until proven otherwise. And so just keep that in mind going forward here. The Russell crossed below the uptrend line on this dead cat bounce. We are below the midline on the primary downtrend. This is another one. Qualifies as a dead cat bounce, possible continuation sell-off signal on that, and bear market rules still apply for this. And so keep that in mind. Of all the patterns, volume profile patterns out there, this in here is the least supportive in my opinion. Potentially leading the markets back down to the prior lows if the markets decide to fall out of bed. Okay. Okay, going forward here, some little takeaways I have here. The VIX still holding in there. The VX futures are still holding in there, but some little takeaways which I'm taking from grains of salt, so to speak. As you can see, very elongated profile. It's not supported by any type of historical value, and they typically never do at these price points. Just something, it's that it's hard to maintain lofty levels like this, but they are managing to do it. But basically, I don't believe you should be taking swing trades until you get below 30 on the VIX. And that's why I've been doing pretty well on this sell-off. I'm just going to cash every night, and it's doing day trades, and it's working out really well for me. But we're still holding this level here. If we start breaking our uh, gapping down away from our VIX here, that could be supportive for higher prices in the markets. Um, and then another thing I wanted to point out here, the front end on this sell-off today, it went up 7.5, and that's the main takeaway. And then if I go out 60 days, if I can find it, I went right by it, didn't I? There it is, yeah, 54 days. That went up 5.10%. So basically, the front end of the curve is getting bid up right now versus higher than the back end of the curve. Now, don't get me wrong, this is really bad, but anytime that is a little bit more bullish, that the fact that they're not bidding up the longer dated VIX anymore above the front dated, and that is a little more constructive for the bulls going forward in this market, in my opinion. So it's a building block to build off of going forward. May not work out. That's something I just want to look at for. And another thing, look at our bonds here. The bonds are actually showing relative strength, even better than what we're seeing in the main indices. So this thing here looks like the bonds could be uh, potentially leading us out of this disaster. So this is my leading indicator. We are on the bullish side of the 50% fan. We're just not completely crossing out of the downtrend quite yet as of Friday. So this is something I'm really going to be watching. We've already tried to regain 50% of the sell-off from the highs to the lows. So we've already regained 50%. So this is constructive. This is going to be my major tell if we're going to have some continuation in these markets to the upside, in my opinion. Okay, and then we have our TLT, which seems to be holding out pretty well here. It's nice to see a continued bid with all the stimulus we're seeing in the markets. We're still getting a continued solid bid. My biggest concern is not necessarily the bonds catching a bid; it's the bonds catching a major sell-off, because that major sell-off drives the yields up. So I'm much more concerned for a major spike down on the bonds than necessarily a little people going to safety and actually keeping a bid into the bonds going forward here. Okay. Okay, other things I'm looking at. Okay, we'll look at our SPY, similar as the Qs or the futures, and basically pattern I'm seeing right here. We got it like a mini in an inverse head and shoulders pattern here. What I'm really looking at here is the volume profile. That's why I brought this up. We have a void there. This thing can really, on any type of positive headlines, this thing can rip your head off to the upside to finish this inverted head and shoulders, finish the neckline. So this is a bullish scenario that I'm putting out there for this next week. Okay, Qs don't really have that volume profile disaster pattern. We've actually we've got a lower inverted. Well, that's basically a cup. It's almost a cup inverted. Yeah, more of a cup, I guess you'd have to say. And we're just digesting, and we're kind of maybe flagging out here. So basically, we'll see if we can get a rally off the flag which we put in today, because that kind of looks like a flag into, yeah, that really looks like a flag to me. You got your cup. Okay, we tried to break out. We're flagging out a little bit, maybe for a potential continuation higher. So something to watch on that. And then, like I said, the Russell's just, but don't get me wrong, if we were having a war or something like that, some missiles flying, hitting Saudi Arabia, or some sort of military action to disrupt supply, I mean, you could get yourself a rip your head off rally into the spring. So something to definitely keep note of going forward here on the Russell. That is the one area that could rip your head off if we were to have geopolitical instability going forward in the next week or two, or next coming weeks. Something to keep on the back of the burner back of your mind going forward here. And that could be, I hate to say it, but it could be supportive of the markets. Another thing here on our diamonds, see the void in the volume profile. Voids, they act as resistance because buyers and sellers were just completely dumping out of the. They didn't want to have anything to do with this price range. Okay, and that's why you have that void there. So just keep that in mind. If we were to be opening up, gapping near that void, that is a very strong rip your head off short squeeze scenario for even the diamonds. So now we have the SPY and the diamonds both giving us that potential into this week. SMH. Okay, just pretty much digesting here. We got maybe a potential cup here, and if we could get a back test back down to the green line, that could be a cup and handle scenario going into the first of the week. Something a pattern that I'm looking at here. USO absolutely destroyed. They're talking about single digits on USO here. We're right down here testing the prior lows on USO. Really, really ugly pattern. Hard to say what's going to happen here, but they're even pricing in 350 for a downside potential for USO this week. So really, really ugly pattern. If I were to draw from up here from the there and bring our fib fam in and we put that right there, that's something I'm kind of looking at for the trend. We actually need to it'd be the end of the week, probably middle to end of the week before we could actually potentially cross to the bullish side on that trend. So really ugly. So something to keep in mind going forward here. And XLF, very important to keep an eye on your financials of your spiders. That's the most important one for bullish and bearish signs, in my opinion. And if you come from the breakdown point, put your fib fan in, and get an idea of where we are in relation to the fib fan. Basically, barely holding on to this. Kind of looks like a cup, and we're building out a handle here. We're right into this. So this actually, we got a void up here. This actually suggests to me that we are about to have a cup and handle breakout on XLF, in my opinion. I mean, that's just my plain and simple, down and dirty technical analysis going forward into this week. Another cup and handle scenario, cup handle came into resistance, but we don't really have that void up here for the rip your head off rally scenario. But something to keep on watch. I do have my levels and all these charts. If you go back and look them over, I have the market maker moves on the alerts already set up. So you don't even have to look them up yourself. You can just copy them right off my video if you want to, and put them on your own charts. As far as that goes, if you just ask me for any particular charts at the end of the video, I'm more than happy to share my actual charts with you. Okay, AMD. What I'm looking here, see this cup? I don't think that's a completed cup. I think we're going to be coming up here this week. So that would finish our cup for AMD going forward this week. So keep that in mind. That is a potential for this week. And we are seeing a lot of relative strength in our semiconductors. This one here, because of where it's at, I would have to put a fib fan on this one. And we'll bring that down here. See, yeah, we've already broken out of the primary downtrend on NVIDIA. It just doesn't seem like quite a flag pattern to me. Little concerned about trying to push my luck to that until we get a back test down here on NVIDIA. But it's going to go with the other semis, in my opinion. So we may not actually get that because NVIDIA is showing a little bit of relative strength. So something to keep in mind going forward here. Just something I'm watching here. NVIDIA, Apple. Apple have been showing, Apple and Microsoft, they're using those to move the market. And every time we have a sell-off, Apple tends to lead to the downside. So obviously there is some big money trying to get out of Apple still. So but they are using it to manipulate the markets. Some things that I did want to point out here on Apple. Excuse me. Um, we have what seems to be an inverted head and shoulders. And if we were to start breaking out here, the measured move for that would be up in here in the 390 or 385, 285, 290 area for an inverted head and shoulders breakout. So this is one of the few out there that I think the option makers have it priced too cheap going into next week. So just keep that in mind going forward here. Like I said, if the markets were to rally, then these options are awfully cheap in relation to that scenario. Just something that I'm got on my watch here going forward into the week next week. Facebook. Basically a cup. We had our cup, but now we have a second cup here. That's actually still a little valid. So we're basically just chopping. And there's not a lot I can do with that one because they are so exposed to the ad revenue side, and that area of the market is just getting destroyed, and they are not going to see any type of government help. So that is not a chart pattern that I would be overly impressed about. Actually, this is actually looking more and more like chop for Alibaba, going sideways here. So I've got it on watch. I really don't want to be putting on huge bets until we get above our midline. If we were to open above our midline, I might actually consider pushing some long scenarios for Alibaba. So just something to keep on watch going forward here. Um, you know, uh, it has been showing a lot of relative weakness or relative strength. Just something to I do want to keep on my alerts in case something were to set up for me. Netflix is one of my favorite traders. I made most all my money today in Netflix calls, and just off this morning move, I was really rocking it on Netflix. And basically, what I'm seeing here, we have a inverted head and shoulders pattern. We tried today to break back out above this head and shoulders, above this red line, which has acted as resistance in the past, and then we rejected it into the close. I think this is setting up for new 52-week highs in the not so distant future. So this is one of my favorite patterns going into this next week for a all-time high back test going into the week. And then Amazon, a little concerned that it might be having some problems going forward. We'll see what happens here. It's having a lot of warehouse contamination issues from the coronavirus. So that might impede upside for Amazon going into this next week, in my opinion. And it looks like we're preparing to cross out of the uptrend, which does not mean necessarily it's going to sell off. It's just something to be concerned about going forward, and that it's a chop fest scenario for Amazon. Microsoft. Come on here. Okay, we got a cup going on here. There we go. We got it good. We got like a little cup scenario going on here. Okay, and we came up. Uh, what I really like to see on this cup scenario is to come up here and then back test. We're showing weakness early on the Microsoft, so it's really not necessarily showing me the kind of signals that I would like to see uh, for a bullish continuation pattern, in my opinion. And it's trading in tandem with Apple here lately, and we are not even we're not close to that midline, and that's like the potential bullish cross. So just keep that one in mind going forward here in your trading. Um, so that's all I can say about Microsoft. Like I said, it's trading with Apple. Zoom video, this thing here, I think is setting up for a run to new all-time highs. I mean, that end of day close there, it looks like we're preparing a breakout move for a massive pop in Zoom video. So I could be wrong, but it looks like we might be maybe not necessarily new all-time highs, but it looks like a nice little run setting up here for Zoom. Roku, this is one that really boggles my mind why it hasn't taken off yet. But basically, we have what I consider to be a cup, and now it looks like we are trying to come out of what could be potential a handle for a rocket move higher. So this one here is definitely on my watch as a bottom fishing candidate going into the first of next week. And then my final one, which all the talk this week, Boeing. And this, I mean, you can tell by the percent loss here, the squeeze is over. So basically, whatever happens to Boeing from here is going to be largely dictated by actual money, new money coming in here supporting price. And the squeeze is done. They're done with it. That's why they dumped it like that. So basically, we got a cup, okay, and maybe that's all we get for the handle. I mean, let's see, the handle came down to here before, so that'd be the 150 area, and we're 157.50. Or we closed at 162. So basically, the 150 area probably is going to get back tested, in my opinion, before we might actually have a handle to buy for the breakout of the midline on a Boeing going into the first of the week. Okay, so basically, my bottom line is I'm coming into the first of the week, and if you notice, I had a little bit more bullish tone, which I am a very negative person on these markets. Uh, but I'm thinking the first of the week, we're probably going to open red at the first of the week, and then we'll go from there and possibly catch some responsive bids. Going into Tuesday and Wednesday. So we'll see what happens. These are my ideas. Please like the video if you like it. Leave comments below. Any questions and stuff, I'm more than happy to share them. And then retweet it on Gumby9662C. I'll have it posted on my stream. And, let's try to get this out there and try to get learn as much as we can from each other. Thanks a lot. And I will, I might put another video out this weekend, but I probably won't see it till next week.